Right. Well, thank you everyone for taking the time out of your day to come and join this webinar with Paul and myself. Um, Most of you may know us through our conferences and other kind of white papers and documents we put out, but just as a bit of a little introduction, my name's Arun Chauhan. I'm a lawyer and director, and I run this law firm Tenet. We are a firm that specialises in disputes, investigations and compliance arising out of fraud and financial crime. We've been doing quite a lot of work with the Housing Association world for a number of years, but I've been working in the sector probably since about 2011, 2010 on investigations and recovering money from fraud, working alongside conference organisers like the NHF, in which I met Paul a number of years ago. And for some reason, Paul has tied himself up in knots working with me in our efforts to kind of inform the sector about fraud and its risks. Paul, do you want to make a little intro about yourself, and then I can talk about what we're planning to do?
Hi everyone, good afternoon. Great to see you. Thanks for joining us. So yes, I've cajoled Aaron into doing this for the last few years. I'm these days mainly a non-exec and do a bit of consulting in this area, which I think is an area that the sector needs to do better on and try and drive best practice. And that's what was been driving us both, I think, over the last few years, is how can we really up the ante in terms of driving best practice in this area. So hopefully more of that to follow in the next 55 minutes or so.
Yeah, great. Thanks, Paul. So just to give a little bit of background to those of you who don't know us, or why we're talking about fraud today and housing associations. Back in 2023, we ran a roundtable with a few housing associations and those working in the sector, maybe 10, 12 people, to talk about why is fraud not being talked about in the sector. And we produced what we refer to as white papers, thought leadership on prevention, detection, awareness, and recovery. And we produced a white paper called Nothing to See Here. We then got ambitious the year after and thought, let's run a housing sector conference. And we ran a conference that year supported by Mazars. And we ended up with a great bunch of speakers, a number of people attending from housing associations, and produced the next iteration of our thought leadership about fraud in the sector, which was called Not on the Agenda. You can see everything we do is a bit tongue-in-cheek. Well, we've come around to this year. This year we've been gratefully supported by Crow UK, and we held our conference in Manchester at the start of October. And we have just now published our latest white paper, Stop Leaving It to Chance, really focusing on why is this as a compliance risk are being left to chance, whereas other compliance risks are not. Now, it's quite timely, you may say, by design or by fortune, that we've published this white paper shortly after the sector risk profile has been updated, where there is a renewed and improved, I would say, emphasis on fraud, and grateful for the regulator to do that. And they've referenced the failure to prevent fraud offence, and it makes this whole landscape of fraud for the sector a lot more interesting. Now, the white paper, my colleague Paula is going to put various polls and things in the chat, but a copy of the white paper can be downloaded. There's a link in the chat if you've not got it already. What we're not going to do on this hour is talk through the white paper, because you can read it, and we wanted to do something a bit more than just talk through what we've written. The key for us is insight. So a little like those who know me from my At the Coalface webinars, we are going to go through five topics over about 10 minutes each, which will cover a range of areas. And if you have questions during any of those topics during the session, just pop them in the chat. We're going to try and deal with them as we go along. What you're really going to get is these 5 topics of transparency, about fraud in organizations. We're going to unpack the sector risk profile. We're going to talk about board engagement. Is it yet another priority that they thinking we have to deal with, and therefore, where do they rank it? How do we get them interested? Focusing on why nil returns is actually the outlier and not good practice in our view. Talking about some horizon scanning and wish lists for 2026. Really what's going to happen is you're going to get an insight into what happens most weeks, where Paul and me jump on calls with each other and we chew the fat. And that's broadly what we're going to do today. We're going to have a conversation. You're going to eavesdrop, and hopefully there's some stuff there which is of interest and help. But please do ask questions as we go along. Paul, anything to add about that overview?
No, as you say, I think it was great that we've got a different and a more focused emphasis on in the sectorist profile now for an area that I think, as I said before, I feel like the sector's normalised a bit too much silence in the past around this topic, and we need this sort of more pragmatic openness about fraud risk. And of course, when we talk about it, when we've done a bit of work with people in the sector, you and I, we use the four themes to try and sort of unpack it, because when you ask people, how are you doing with fraud risk, it's kind of a big question. And certainly as a board member, how do you get the assurance that you're looking for when on such a big topic? And that's why we use the four themes: awareness, prevention, detection, and recovery return, as a sort of opener to sort of see how we're doing. Often we find that detection is the poor relation of awareness and prevention. Perhaps we'll talk to that a bit. And we've also been looking at through particularly three process areas and lenses now. How are you doing with your risk registers? How is it going with policies and procedures? And how is it looking in terms of training and development? And on that sort of last point, I think takes us maybe towards the first topic, which is transparency. But before we do that, because we've managed to try and make this as interactive as possible, and therefore create as much fuss as we can for our colleague Paula, we're going to try and do the first poll and just see what the reaction is to the first poll. So hopefully, Paula, you'll be able to get that up on screen now.
Am I allowed to vote, Paul?
You can. I can't see the poll, so I don't know whether it's I don't know if you can see it, Aaron, or not.
I can if you put, so I've got the chat up, and we've got 14 responses in at the moment, and saying it's changing, it's going up. So there's a fair split between housing at 50 odd percent and contract management and procurement at about 30%, finance at 10%.
Okay.
Interesting development's only 2%, repairs are only 2%, IT is only 2%. If you,
yep, I've got it there. Yeah, okay.
Great. Can you see that now?
Yeah.
Right.
So I think that it's just a sort of starting point to just get a feel for what's on people's minds when it comes to fraud risk. And we've done this at the recent conference and elsewhere. It kind of moves as we talk about it through the whole of the session, because it is about that transparency. It's about, do we understand what we're talking about in terms of where the areas are, and interesting where the areas people aren't seeing as much activity. Okay, so thank you for that. So I think the great thing about the transparency piece is it talks to all four of the themes, because it tells us how we're doing across all of them. And being clear about what it is when it comes to fraud risk is an absolutely key starting point. Paula, I think you're going to add a couple of charts from our survey that we did this year. So we ran a survey, we had about 50 organisations give us their feedback on these key questions. We're going to try and run this survey every year, and it just starts to fill the gap where we want to understand what's going on. Clearly, chart 9 tells us there's a fraud going on in the sector, and yet the understanding is that people are sending in nil returns to the regulator. Could be for all sorts of reasons, like it's not a proven fraud or whatever, but it brings us into another topic about internal reporting that we're going to come to in a short while. But Aaron, did you want to talk about the company-wide definition piece first?
Yeah, I think it's really interesting, isn't it, where you see that slide, chart 6, does your organization have a company-wide definition of fraud? And I bet of that 85%, a quite hefty percentage will have the almost Collins dictionary definition of what fraud is. But that makes it quite an outlier subject, in my view, for people to relate to, because it's such a sinister criminal act when you take the normal definitions, that it's not relatable. And I think part of this transparency process, really, we're talking about is how do organizations get their people, their colleagues, and their customers to understand what we're all concerned about when it comes to fraud. Now, there's lots of ways we can define fraud. We can use the legislation. We can use the failure to prevent fraud legislation, the Economic Crime Corporate Transparency Act, Schedule 12, which I bang on about, which defines fraud. There's a whole heap of things, from bribery, money laundering, tax evasion, fraud definitions we tend to find in definitions in organizations. But what all of these things don't do is they don't make it relatable. And I know people have heard me talk about this before. I talk about this a lot. I think you can't imagine, you can't visualize what fraud is if you say the word to anyone in the organization, your organization. Everyone might have a different view of how they imagine what fraud is. It's like you're translating a word in a language people don't understand, but you do, and they're trying to work it out. So you've got to start to find a way to visualize what it is the board, senior management team see as fraud. What is your definition of sharp practice? What is your definition of wrongdoing? Because you've got to think fraud ultimately is, I tried to write this down as unpacking it in lay terms. Fraud is hiding the truth, making false promises, and pretending to be someone else, any of those, for gain for yourselves or others. But then when we look at examples in the sector, we see some kind of outlier set, potential areas of fraud, or will people say it's just sharp practice or people being cute? We had one example speaking to an organization recently saying, employees taking advantage of their sick pay days because it's an entitlement. Even though they weren't sick, they would take their days off. Is that fraudulent, or is that just, playing the game? That's what they're entitled to do. We've often, you and I have talked about short-term lettings. Again, making it relatable, making people think. Direct labor operatives going out, buying goods, seeing a 2-for-1 deal on the goods, paying for them, taking the second one and selling it on eBay. Is that something we consider as fraudulent? I've had something recently for an organisation where a tenant is trying to put through a right to buy application, but via their daughter. And the daughter is being questioned as to the validity of the application, and now has an enacted illegal power of attorney, which actually allows her to have the right to carry through the RTB application. Is that fraudulent? Are we comfortable? And it's talking about examples in each division of the business. So I see there 2% on the poll said development is an area of concern. Have we talked to people in development about what does fraud mean to them in asset disposal and development? Because if you start to understand what they think fraud could be, you might actually find that more people say, well, actually, we might have had some near misses, and that percentage might go up as a risk area. So I think the key is, stop relying on just the Collins Dictionary definition, define fraud in a much wider way, make it relatable, and then start to link it back to what we're focused on in this sector. I think, Paul, you link it back to value for money, for an example. Is that a way to bring it more to life?
Yeah, I think it's about that joining the dots, that activities that we sometimes don't really see as being fraud are actually in that sort of arena. And we're very much in that understanding piece of what we recognize as the common areas of fraud and the areas that we talk about as being the fringes of fraud. Just bringing it back to that piece about people understanding things collectively in a common way. One of the things that we're certainly thinking about could be part of this best practice piece we want to push through, certainly in 2026, is a collective comms piece across the sector, because we know we pick a week or a few days in October or whatever, November, when it's Fraud Awareness Week, or we have Loan Shark Week for other things. And these things fit together, and we want to be making sure that people have a common, regular, collective understanding, consistent understanding of fraud, which will always help us with both awareness, but also prevention, because we know that people are thinking and aware that we're talking about it. That's a key thing. So we're going to do the second poll, which is, if you could run that for us, Paula, and I will check in the chat. So the second poll is about having that collective approach to awareness and training. Would it be useful? Good, 100%, marvelous, lovely number. From what we've seen so far in terms of people's feedback, because I just think having that running through will help people to have this common understanding and keeps it ticking over. I worry about sheep dip training when it comes to fraud, whether that's in the boardroom or whether that's across the organisation sometimes, that we're not covering and keeping people aware of what things look like. So thinking about case studies and stuff like that. So that's great. Thank you very much for your feedback on that. We'll have a think about how we can take that forward too.
Well, can I just add on that? I think one of the things about this, make it relatable, is that if we've got a whole, an audience that's saying 100% would say, yes, comms through the years is useful. that doesn't just have to be comms about fraud in the workplace, the organization, how we can be affected. They can be comms about protecting your loved ones at homes.
Yeah.
You know, I get on my soapbox about the word scam. I have to use it occasionally, but I think it diminishes and reduces the impact and the importance of what's happening. It's fraud, and that's quite a sinister thing. But these comms campaigns can be used to keep your people safe at home, as well as your tenants in certain situations. Scams. We're coming up to Christmas. There's all kinds of things going on right now. So I think it's a useful way to kind of bring people together, which might lead into that culture piece we talk about later, I guess.
Yeah, absolutely. Okay, and so in terms of that piece, there are these new areas that come through on the fringes of fraud, and the scams are a really interesting one, how they affect both customers and colleagues as well. But obviously, an area that affects both customers and certainly our organisations is disrepair. And the number of times we hear people talking about claims farmers, about customers taking bad advice. I mean, we don't want disrepair issues in our sector, full stop, absolutely. But when we have bogus or illegitimate disrepair, that is a real concern for us. And then we have to join the dots and start thinking, is this an area where people are trying to defraud us? So that's another poll we were going to quickly do, if we could put that one up as well, because again, one of my concerns, and particularly in the boardroom, is that recognition that illegitimate disrepair claims that take up a huge amount of time are being recognised that they are a fraud risk. And I know from a recent conference we were at, there's quite a bit of debate about, well, no, they're not. And whether they are or they're not, either way, we all know there's time, effort, and money that goes into this area, and it's a concern. And there's a lot of sharp practice going on, particularly with the claims farmers. And one bit of advice is absolutely report them to the SRA, as I think it is, isn't it, Aaron? In terms of the and we've got to try and help our customers more effectively communicate with us as well to deal with disrepair, but also to ensure that we prevent bogus claims that take up time, cost, and effort. So interesting split there. Thank God it wasn't 52-48, but it's not far off, is it? And that's the kind of thing we need to sort of start ironing out and understanding the definition piece, I think, a little bit. So okay, thank you very much again for your input on that one. Okay, so the next topic we were going to try and move towards, because the sector risk profile has made it perfectly clear, and hopefully in that just section about transparency, it shows how important trust is. And it was brilliant that in the sector risk profile they included, the RSH included the word trust, I think, in there, which is quite a departure from what they'd written in the past, which I think really helps us to emphasize the risks that we run are the non-financial, as well as the financial, when it comes to fraud risk in the sector. With that, we were going to just put a chart up again, which highlights another important part that went into the sector risk profile again that everybody's been talking about, which is the failure to prevent fraud offence. Again, we asked, as part of the survey did recently, how ready people felt for this, irrespective of whether they felt it was appropriate for them, the criteria and all that sort of stuff, which I'm sure Arun will mention there. For me, it's just a really, really good, important, better practice in the sector, in terms of what it says about readiness and dealing with the failure to prevent fraud across the sector. But Arun, if you want to say a bit more about that, I think it was a good link into the sector risk profile this time.
Yeah, you just mentioned the scope, didn't you, as well? There's quickly on the scope, you've got to be an organisation which you hit 2 out of 3 kind of thresholds to be defined as a large organisation and in scope for this legislation. So 250 more than 250 employees, over 36 million turnover, or over 18 million in assets. And if you are ticking any 2 of those 3 boxes, you as an organisation have to have in place adequate procedures to prevent fraud. Now, that's not fraud against your own organisation where you're a victim, but fraud where you could partake in committing fraud in the UK for your benefit. So I think that's where some in the sector yet can't work out, well, why would this be relevant to us? Either for 2 reasons. One, we're not in scope, we're not a large organisation, and I recognise that as an issue, but ultimately, if it's preventing something that is damaging to society, to your customers, to your people, why wouldn't you use this as best practice, as guidance? And secondly, how could we ever commit fraud? And I think it's because we don't recognise as a sector as well as we could do that we could be unwittingly brought in to be committing fraud. So one example we talk about quite a lot is money laundering. We saw housing was one of the main risks that was put on the poll. If your tenants are carrying out illicit activities, and that's the funds being raised at those properties for being used for illicit activities are coming into your organisation towards rent, you are benefiting from the fraud, and money laundering, the Proceeds of Crime Act, is referenced as a part of the definition of fraud in the Economic Crime and Transparency Act. So you think, why bother? Why bother with this? Well, it's about us, A, carrying out best practice, but B, we don't want to unwittingly be caught as beneficiaries of fraud in the organisation. So again, on money laundering, we had an example for a client where they were seeing one of the tenants was carrying out repairs on vehicles outside of their property, different vehicles every week. And no one really joined the dots to think about, well, actually, that tenant might well be generating income from repairing those vehicles, not declaring it, getting benefits. Ultimately, some of that is recycling into our rent, and we are facilitating. We've had situations where suppliers are supplying goods at quite a low value, and we're not asking the right questions about the source of the goods or the supplier. Are they from the black market? Are we therefore putting in goods into our properties that actually have come through that market? And these are all kind of fringes of fraud areas I think people will consider, but not necessarily think as relevant. We only worry as a sector around money laundering, I think, if we are doing estate agency business or credit lending in terms of rent arrears and so on. But money laundering applies to the sector regardless. If you're a reasonably large organisation, it's a full-time job to have a money laundering reporting officer. But often we find that money laundering reporting officers, they've got 4 or 5 hats on. And one of their hats would probably be to deal with fraud. So, the sector risk profile, by referencing their failure to prevent Paul, I think have really elevated the importance of the subject, because it's made us think about the 6 principles that failure to prevent talks about, which, you've got tone from the top, risk assessment, due diligence, training. All of these things need to now be thought about in an organisation. And it links back to what the sector risk profile talks about as well, transparency and promoting a culture of transparency, which comes back to what we said at the start and the definition. Ultimately, that comes back to culture, doesn't it? I think culture is the evidence that rules and values are lived. And that's going to help support your defence of having adequate procedures to failure to prevent fraud. So it's about joining those dots, I think, Paul. And that's something this new iteration of the sector risk profile has probably given a huge springboard towards, in my view.
Yeah, and as you mentioned there with the money laundering bit, that's a bit that's really given me a bit of pause for concern in terms of what we understand, particularly again in the boardroom, what's being fed back to us about money laundering reporting. So, if we've got a situation where we've got nil returns when it comes to fraud, we've got nil returns when it comes to money laundering, we've got no whistleblowing happening in an organization, it back to that culture thing. And really across the whole, all the conferences we've done, culture has always come through. There are lots of issues about cost and compliance, controls, but culture keeps coming through to drive that. And one of the areas that I'm really quite concerned about when it comes to what it says in the sector risk profile as well, which was great to see in there, is boards being equipped to detect, report and learn from fraud incidents, including near misses, which basically comes back to internal reporting, because we've got a bit hung up in the sector about fraud risk reporting to the RSH. And remember also, if you're below 1,000 homes, you don't do an annual fraud risk return. And yet, well, hang on a minute, does that mean they don't have fraud? And there's a real risk, as we know in the sector, about contamination from different parts of the sector and organisations that can affect all of our reputations. And so I think there's something there about tightening up fraud reporting next year, the external piece of it. Not to say we should do more, but actually how we do it internally. Because I think what the fraud what the sector risk profile really does is it puts it in the right place. It comes back to boards to be aware of this, to be on top of this. This isn't about, I think, the RSH having to tell us what to do when it comes to fraud risk reporting. It's about guiding us to make sure we're covering it. And so on to the next poll, which is about that internal reporting, because I think this is another area of better practice, hopefully, whereby if we had some more consistency in our approach to internal reporting, we might find that collectively that we start to have that more pragmatic openness. I mean, we share our examples of risks when it comes to cyber, and in particular, certainly health and safety, asset management, compliance areas. I think this is another one where we're thinking, can there be more done to make internal reporting more effective, which, you know, sort of usurps a little bit the external reporting piece. And again, an overwhelming response so far that sort of says, yeah, guidelines around what that would look like, probably in terms of also tightening up external reporting, would be welcome. Again, back to that proportionate, pragmatic transparency, which I think is what this topic really needs for the sector. So thank you for your feedback on that.
Well, could I just add on that? Just at this point, you know, you're right. You know, the regulator wants us to kind of work this out for ourselves and give them assurance. And it's they're not here to tell us what to do. But, you know, you think about the failure to prevent. If you are an organisation in scope, or even if you're not, you've got a great platform now to go and talk to your suppliers about why fraud is important to you. And part of that, I know we talk about external reporting in the sense of reporting to the regulator, but part of this guidelines for internal reporting can also be extended to your suppliers because they can be your eyes and ears as well. And it's another great opportunity to build on detection, which is, you know, that bugbear that there's not enough detection. So, you know, bringing your suppliers on this journey as well. There's a great prompt in the sector risk profile to do that now as well. So I thought I'd just add that in.
No, great, thanks. And that's, you know, that's almost as if we rehearsed it, Aaron. This actually is a good link into the third topic, which is board engagement, which is a bit of, I'm sitting down, but I'm still on a soapbox, it feels, about the board engagement and the real need for that pull to come through from the board in terms of seeking assurance in this area, not reassurance, not false reassurance as well. Do we know what we need to know in this area? Because detection is what some of this is about. We've talked a lot about awareness and prevention, but detection as well. Next chart we're going to see from the survey. I mean, in some ways, it's a bit of just a placeholder sort of chart, really. Do you have ongoing fraud inquiries at your year end, last year end? So I was trying to make the sort of distinction here between, well, you shut up shop, do your reporting for your fraud return, annual fraud return, if you're large enough to send it to the RSH. And well, there may be other stuff that's happening in the business, but where's that awareness? Is it understood by the board? How is that internal reporting piece a more holistic overview of what actually is happening in the fraud risk arena? Because, you know, we're going to come to the risk register bit and how we inform that in a short while. And I think that we can see that it's about the culture piece that really comes through, about wanting to know. Do boards want to know about this topic? Do they need to know? And this is where I have this slight concern about fraud, is that compliance subject matter that's a bit like the alarm clock that you keep, yeah, I'll give it a bit of a snooze and I'll come back to it. Whereas asset management, other areas, health and safety, compliance is much, much more in the boardroom discussion, across the business. It's really something that we're bearing down on. Well, I think we've got to do the same around fraud risk for the same reasons. It can't be that sort of hygiene factor for us when it comes to compliance, because it is a compliance topic. And so, you know, when people talk to stuff about it's immaterial, so we didn't need to include this or that when it comes to fraud. But what about the small frauds that all add up? What does that say about our culture? What does that say about our distaste for fraud as an organisation? We do some of our training that we do. We've been talking about the fraud risk appetite and the sort of comments we get. Oh no, we're zero tolerance. oh, really? So does that mean zero tolerance? Does that mean you don't tolerate it? Because when you put yourself in zero tolerance, you put yourself in a really difficult position when it comes to every single type of issue you got, right through to, well, it's probably happening somewhere else, but not here. Or is that really fraud? Or we've just got other priorities. And what does that say about your fraud risk appetite? And what we're then getting to is in the culture piece, which is you can have the words like zero tolerance, but it's the actions that really count. And so consequently, I think trying to get that balance right is really, really important. And if we look at the next chart that we were going to put up, please. So I know they're a bit small on screen, he says, taking his glasses off, but when it comes to the detection bit and boards being aware of these, we've got these in the white paper, and you'll see them in a bit more detail. Yeah, there's stuff happening around tenancy fraud, but not everywhere, and not as significantly when you think about that's our main bread and butter part of our business. There's nothing really happening in our supply chain, allegedly, when it comes back to where frauds have been identified. How can that be, given the activity that happens and the volume of activity there? We've probably got very, much better and stronger around financial controls areas, because that's where we usually ask our internal auditors to have a look. But actually, there's still risks within there, particularly where AI might be taking us. And then there's other areas such as cyber risks, such as accreditations risks, such as disrepair. Those are the ones that are coming through. So I think that board engagement piece is so important for us, and it talks to that culture. If there's people wanting to know and pulling it through, but part of it isn't helping board, and a lot of you on the call help board to understand what they should be looking for and asking about, as well as board members being well informed to know what questions to ask in this arena. So I think pulling that through is absolutely key. And one of the ways we do that is that we talk about risk heat maps. So the next poll we've got, in fact, we've got two polls in quick succession. First of all, do you use a fraud risk heat map? Because basically, certainly from a board point of view, when you've got lots of words, occasionally numbers, the odd visual is really helpful in terms of helping us to understand where those fraud risks are and where they're going. Are they tending to be, likelihood is growing or not? And it helps you to talk about mitigation. So I think fraud risk heat maps will really help everybody understand where they're at, where they're trying to get to, that gap analysis, and where the mitigations need to be. But obviously the next poll question, so it's really interesting, people have said they don't use fraud risk heat maps. Hopefully maybe that's something to just have a think about, could be helpful going forward. So do they get shared with board as a visual representation? I guess we can work out what the answer to that's going to be based on the last one, really. And that, I would say, is something that could really help prompt board, educate boards, audit risk committees in particular, but more importantly, start to inform our risk appetite, do what it says on the sector risk profile about boards being able then to support this process, but also help us all know proportionately where we should be looking, where our risks are at the moment. And as we've probably covered in various examples we've gone through here, we've got our known areas of fraud risk, but we've got lots of known unknowns that we know are kind of out there that we really need to have a look at and understand, and how much of a risk they are. The supply chain one, the development one is a great couple of examples. Disrepair has been another one that we just talked about in there. So culture is where it's at. I think we've got to make sure that the culture piece is right. At the end of the day, from a board point of view, when you're doing assurance and you want assurance, not reassurance, as we often say, trust is not a control. And I think you'll see in the white paper, Bromford's great example there, that they have eyes and ears throughout the organisation, including in the boardroom where they sort of lead it from the front. Anything you wanted to add to that, Arun?
Yeah, well, I think it leads into a comment we've had in the chat, which says, I'd like to see a movement away from trust-based assurance towards evidence-based assurance. And that's what fraud heat maps probably can do, where you look at every division of your organisation, and they're taking ownership of updating an operational risk register with frauds they are aware of, the near misses, where they think fraud could occur, where the gaps are, and start to really drill down to what the risks are and what the mitigation preventative steps are. I think for the board engagement point though, it's just worth knowing, if you just thinking of a few things, your board should be bothered about this. If your senior management team bothered about it, that's the bottom line. If your senior management team are worried about fraud because they're actually looking at the practicalities and risks of it, the board should start to get engaged. And we know we talk about it, treating fraud as a compliance point, but if you can imagine that fraud could cause a big health and safety risk, I was just trying to, you can dream up all kinds of scenarios, but dodgy piping from a supplier that's been fraudulent about their qualifications. They've got on board, they've lied about how, their ability or their diversification, and then they cause an explosion through their work, poor work. That was a fraud risk that's manifested out as a health and safety significant issue. You can get under the skin of a lot of risks through embedding good fraud controls. And also, you mentioned immateriality. We often talk about materiality, don't we, about financial, but immateriality is not the same as proportionality. Lots of small frauds can suddenly become material. It's about what's important to the board, what are the things they're trying to do, and they're trying to keep their people and their homes safe. And fraud is part of that journey. So there is a wider cultural piece, and that feeds into how they can demonstrate, if they get on board with this, their top level commitment. That's what the Failure to Prevent Fraud offence calls for. And that's about, we want to understand this subject. Look, if fraud is on the generic list of national, what did I say earlier? I said national security threats. The government have put fraud as a national security threat. Probably should be a threat for most organisations to recognise as well.
Yeah. Okay. And again, it's that chronic unease about compliance matters in the sector that we're all in the midst of, but for various reasons, if you're assured about how the processes are working, then you ask better questions about it. It's when you're not clear, you haven't got that clarity, that ultimately, puts into question how things are going. So our fourth topic is about nil returns as an outlier. I think it was a brilliant piece of feedback we got on a presentation we gave when we did some board training. That nil returns, that have been, there was a Freedom of Information Act in 2024 that sort of looked at what had been sent into the RSH and showed that a large proportion, 50% more, had been nil returns. That was in our last white paper. And this is what we're trying to open up with a survey that we've been doing recently. And let's just take a quick straw poll again. We're keeping you very busy on this webinar, aren't we? We're supposed to be doing the talking, but anyway. Another poll, if we can, just to sort of see, for those of you who might be new to our discussions. I know many of you, we've had quite an engaged crowd at the conferences, obviously, and found that nil returns had been at the lower end. And again, we're an interesting mix. Today's group, again, it comes back to that constructive curiosity across the business in this compliance arena. If it's a nil return or a negligible return, is it because of the vagaries of what you think needs to be reported to the RSH, or is it because, well, no, we've taken pride, we haven't got any tenancy fraud, we haven't got any payroll or expenses fraud, we haven't got any fraud in our fleet or in our stores or through our contractors or our supply chain, or the list goes on. How can that be? It's not that in other sectors, is it, Arun? So how can it be in ours? And if you get 1 year, okay, but what continuous successive years where you've had nil returns? So I think that's the question. Board members have also got to be jumping back on and sort of saying, hey, how can that be the case? So we have a chart that we've been talking about, which I think hopefully illustrates that if we keep telling the RSH, as well as the rest of ourselves in the sector, that we don't have fraud, then, it's had that limited reference in the sector risk profile, which has changed now, which is brilliant. So we're trying to up the ante to say it should have more focus so that, that we don't have more nil returns, we have less nil returns, we make it the outlier going forward. That at the end of the day, that culture piece really drives where we want to get to. That curiosity piece, that fact that this is a VFM matter, not just a compliance matter as well. The fact it helps us understand our culture about business integrity as well as being a key thing that we've learned a lot about in terms of even in whistleblowing in this sort of area of fraud. It's less about saying, well, hang on, we know you're up to something. It's more about, well, this doesn't feel right. Could this be better? Can we improve? And I think, if we can move that, we can find out and do more of the awareness, the prevention, but arguably it still needs that detection. And if the detection is low, then your returns are low too. And let's think about that in terms of the customer and the colleague, as we talked about earlier on, and building trust. That's a real value add for our organizations. So it feels like we should be doing much, much more to sort of challenge that nil return is the norm and is acceptable, because I don't think it is, bluntly. Aaron, was there anything more you wanted to add to that?
How long have you got? There's, I've said all along, every other sector I know of and I've worked in, fraud is a big issue. We know fraud is 40% of all crime. There were 4.1 million incidents of fraud last year and 6,000 arrests. There's a gap. There's lots of fraud going on and not enough people being picked out. So, it's on organizations to find out fraud. It doesn't sit with every other sector that there's nil returns at the volume as this sector. I could come down to a number of reasons. One, guidelines and understanding of how to report it. But more importantly, I think, why is it not happening? It's back to the definition. I think it's been defined so narrowly that fraud is not being reported because people aren't identifying it by way of its definition. It's not wide enough as it should be. I think also sometimes people don't report fraud we don't detect fraud because we're scared of calling it out. And we don't want to talk about near misses. We want to wait for a prosecution to say, yes, it was definitely fraud. Regulator has talked about near misses. If I had my own lovely world in my life, I'd say to the regulator, would it be possible ever to have a situation where we can have an amnesty year, where everyone's allowed to just say all near misses, all possible incidents? Can we just get a real picture of what's going on here? No reprisal, no risk of downgrading. Just let's get a real understanding from the sector what's going on here, because that will drive the better practice. And I think we'll get rid of nil returns and people understand it's okay to report. I don't know, Paul, I think organizations are scared to report real numbers of near misses because of the risk of it standing as an outlier where it should be the other way around.
Again, it's about reputational risk and trying to manage that in the most pragmatic way. At the end of the day, it sits internally in the organizations. It's less about, I think, if we're doing the right things and we're operating well and we're doing the right governance stuff generally, then that we're delivering on our purpose, which at the end of the day is what we're all trying to do. The RSH is just trying to guide us on that journey. Yeah. It's up to us to be doing that. So that's why I think, it's what do we want to know, that we're informed. And again, a great parallel to health and safety. We've learned so much, haven't we, by recognizing, pushing near misses. Near misses inform us so well to stop the big issues. Well, it's exactly the same with fraud, isn't it? And that's what we've got to try and make sure we learn from. Sorry, yeah.
Yeah, no, we do. And I say it's about being informed, isn't it? The more reporting we can have, the more informed everyone can be. But back on that whistleblowing point, if you're thinking about why are we not having any, if many, whistleblowing reports in an organization, it's either because people can't pick out fraud from the crowd and they don't define it the way that we may be talking about it now. They don't understand the process for reporting. There's the fear of reprisal reporting, or the other option is we have to accept, we think there's no fraud, or everyone's confident enough in management that we'll talk to our line managers and there's no need for a whistleblowing hotline. But either way, we're not being informed. Boards are not being informed. SMT is not being informed, and so there's more onus for us to dig deeper now. I think use those fraud heat maps, for example, to try and get into the fingernails of what's going on.
Yeah, and then link it back into the whole risk register process. Where is fraud on your risk register, aside from the sub-register of the types of fraud risks, of which there are many, working out which ones are proportionate to you? but ultimately then to think about where it sits, where it's moving towards. Is it moving in the right direction? Are the mitigations right? Are you getting the right assurance, whether it's from your internal audit, albeit, if I'm chair of audit and risk and I'm setting the internal audit plan for the year, am I informed enough to know what areas that I really should be thinking about in terms of where that assurance should be coming from? Are we getting independent assurance where that might be more niche and required or whatever? The whole point is, I think there's a lot to learn from other areas of compliance that we can take forward. So that takes us into the final topic as we getting close to our time here, which is the horizons scanning topic. And we've got some more charts that we had from the survey that we did, including the white paper. Again, a bit small, but as you can see from there, just trying to think about where are some of the other areas that are coming through. Did people recognize that they've had an incident from fraud as a result of cyber activity? Again, we're usually quite good in the sector at trying to share that, but we know there are risks when it comes to cyber and AI, and there's opportunities for us to be able to find and mitigate that risk, and engaging our IT colleagues and how they feed back to board and provide information about fraud risk mitigation is absolutely crucial. Again, telling us about near misses is really important, I find, on audit and risk committees. We talked there about disrepair claims, majority of saying no, we're not thinking about it in that sort of respect, as the earlier poll sort of demonstrated. So again, in line with what the sector's saying, I really think we ought to be talking about that a bit more and working together to try and deal with the claims farmers bits, as well as clear communications with our customers to try and help them. We do not want to be taking our customers to court, making it harder for us to get them, having them pay their rent going forward, and actually putting them through the breakdown in trust that happens there. So I think disrepair is a key one. And then that last one is something I've been certainly keen on. We recognise many usual types of tenancy frauds. What about short-term letting on the platforms and Airbnb and Vrbo and Booking.com? Our homes being let out, short-term lets, the problems that may cause into ASB repairs, but also, are people in those homes regularly enough? Then it's about the purpose piece, and we've been looking at software solution around some of that to try and understand where those hotspots are, because again, from a board point of view, are we doing anything about this, or are we, as with other topics of fraud, leaving it to chance? We happen to find that fraud when it comes around. So I think that's another one we should be asking, what is going on in that area. So there are many emerging areas of horizon scanning. We do it for other types of risks. We've got to be doing it for fraud. Again, back to that original question about comms campaigns, we can start to think about what sort of comms campaigns would be really useful for the sector to be kept aware of, new areas of fraud risk, or indeed the old ones that are coming back that are just done in different kinds of ways, which seems to be the circle that we face often. So we're going to keep the survey open. We're going to put the link in for the survey into the chat in due course, so you can still hopefully contribute to that. We're going to put something out in early 2026 about the results we learned from 25. Hopefully that will prompt you to think about your return for next year to the RSH, or indeed how you report into board audit and risk for next year as well, in terms of some of the things that we need to do there. So that will be one that we run through for next year. We've also got hopefully a wish list of things we'd like to see for 2026 in terms of things that we would look to do differently. Hopefully will come through. I'm going to share those. That's on screen now. We're going to share that with you early in 2026 as well. Just as things that we would hopefully see. You can see for yourselves there the things that we can work together on across the sector, because again, this is not something new. This is something we're already doing. It's more of a case of how do we do it more effectively and more consistently? How do we combat fraud, keep people, homes and our reputations safe? So we're going to share that with you again. So conscious of time, Arun, and wrapping things up and seeing if there's any questions.
Yeah, I was just thinking of any kind of outline thing for me. I think there's two areas really I think we could continue to talk about for horizon scanning is learning from our tenants. our tenants might see instances where they are being caught by fraudulent attempts. We've seen things where people have seen fraudsters try to open up bank accounts at rented accommodation with someone else's name and using a number of addresses in the same street, which is essentially money laundering again. But it's tenants being aware, knowing what to do, but also informing us as an organisation. So it should be a two-way street. We can educate them. I think we can move forward in 2026 to take education from our tenants as well. And really monitoring that gap between procurement and contract management. I think that's one of the things we've really identified this year, is that we do a lot of good stuff in the sector around procurement regs, but we almost think that those procurement processes we go through capture all fraud risk. Therefore, there's going to be a limited chance of fraud when the contracts are in operation. But that's where the gap is. There's no one really monitoring contracts as much as we monitored the procurement onboarding process. And we're seeing gaps there in repairs, contract management, fictitious invoices, duplicate invoices, rogue repairs. So I think there's lots of things to look forward to for to put some focus on. From our own side, Paul and I and a colleague Elaine here, we're doing quite a lot more work now with organisations. We've created some template policies for organisations, which we and contract terms which are there for organisations to use if they're interested in looking at what that's about. We offer this independent assurance work now as a kind of independent third line, I suppose, to just have a look at how you're approaching risk assessments and how you're combating fraud. Paul's alluded to the training for boards and SMT, but we're only as good as the information we get from the people who join us, like yourself. So the more feedback on the fraud survey, attending the conferences, giving us information on what you want to hear about, helps us inform you and your boards and your colleagues. So I guess that brings us up to 8 minutes. If there's any questions out there that you would like to ask, as with all good webinars, you'd expect the speakers to have a couple of pre-prepared questions, and we have not. So,
but we have got another poll. If that
have we got another poll? Have I missed?
We got one last poll because it is Christmas poll, and we didn't want anybody to miss out. One more. Let's see if we get that one more poll up, which is the one that just asks the question about: has anything changed? Has anything changed in terms of where you think the greatest risk might be in terms of where do you think you need greater assurance in relation to fraud risk now, as opposed to where we were at the start? Because we know it was about housing, and then it was contract management, procurement, and then it was repairs. Has anything changed in terms of people's feelings about that? Okay, it's still much the same. I think repairs and development is creeping up a bit.
I think the spread's really changed, hasn't it? Repairs, contract management, finance has gone down, which is really interesting. I just mentioned something about that. Development's gone up, IT's gone up a lot.
Yeah.
And think about IT not just as the gateway for the fraudsters, but the procurement of IT software and equipment as well. That's really fascinating. So that shows them how you're going to inform your boards about the plethora of risks. Well, actually, now you're saying, like we think, the ecosystem of a housing association is prone to lots of fraud risk across its entirety. And now, the feedback is that there may be a bit more recognition about that, which is useful.
I would just add, I'm just checking back to the white paper when we did exactly that sort of before and after at the end of the conference last time around. Similarly, housing dropped back as it has done this time. Repairs shot up quite a lot, but contractor management and procurement was the one that had shot up at the conference. So this is an interesting cross section, and IT's come out much more this time around. So yeah. Great. Thank you very much, everybody, for your responses to our many polls. But hopefully they're all part of filling the gap of understanding in the sector, because that's how hopefully we can share better practice as we go into the new year.
I think the only thing I'd add on that, it's interesting with the finance coming down. One of the things we get commonly back as feedback from organisations is there is this faith that finance will catch all in terms of fraud risk, and ultimately finance are the gatekeeper, and I think that message needs to change. Right, I think finance are part of the gatekeeping and the controls, but they're not everything. And there's a lot of pressure on finance teams, and that can be alleviated by spreading the education and learning across all areas, so that finance are only really having to pick up real outliers. So it's just something to keep aware of as well. But well, it seems that we have either said everything we possibly can and there's no questions at all, or everyone's asleep, or something in between. But if there are no questions, we'll give you 5 minutes of your day back. Thank you for taking the time to attend. We really appreciate it. Thank you for downloading the white paper. Oh yes, Paula, you remind us, we have a LinkedIn group, Fraud Nothing to See Here, again, tongue in cheek. Probably about 200, 250 people are in that, mainly housing association colleagues, I would say, and some local authorities. It's an information sharing platform, really, just to educate. And we will be in touch in 2026 with however we progress from here, and we hope you can stay in touch. Thank you very much.